realizes a fair value. We are definitely staring down a worst case scenario, something I've been hoping we would avoid.
Hi, and welcome to the X22 Report Spotlight. Today we have a returning guest, Greg Mannarino. You can find him on Trader's Choice. That's traderschoice.net. You can visit him on his YouTube channel, Gregory Mannarino. Greg, welcome back to the Spotlight.
It's great to be here, Dave. Thanks for having me. I appreciate it.
Hey, thanks for being here. And we were just speaking right before we started to record here, but we were talking about the stock market. We were talking about housing. And I wanted to start off with the stock market. I mean, we've been talking a long time about the market and how, it's not a real open and free market, and we're starting to see the market move up and down. I mean, do you think we're at that point where the market is going to start to really just like rip itself apart and just decline?
Okay. We can't just look at the market, although there's a lot of underlying things that, again, we were talking about just before we started recording here that we need to pay attention to, and we're going to cover that. But I think it goes back to the bigger picture. And the bigger picture is we are existing in under the biggest bubble in the history of the world. We've never seen anything like it before. You know exactly what I'm talking about. It's a debt bubble. It's engulfing the earth. It's a financial monster that is going to unleash itself on every corner of the earth at one particular time. This is where no man, where no woman has gone before, a collective effort by world central banks and their respective leaders to keep everything artificially propped up. And unfortunately, the middle class is going to suffer as it always does. And when this does correct the fair value. Now, let's look back here at the stock market. Major efforts have been going on here since the sell-off in October to try to reprop all of this back up. Further interest rate suppression, printing cash out of thin air, buying more debt. But we're starting to see instability. I mean, it's right in our face. Instability here in the bond market, going back to that. Everyone looks at the stock market as the wrong place to look. You got to look at the bigger aspect of the market, which is, as you well know, the debt market. So gauging off of that and looking at, we now have a partial yield curve inversion. I'm certain that you and I have spoken about this before. I don't know about you, but it's one of the things that I got ridiculed about on a lot of other websites, that don't like me, don't like you, don't like everybody else. You know how it is. But look, now we can laugh here because this is something I've addressed many times. We have the 2-year and the 3-year debt units, because that's what they are now yielding higher than the 5. So this is an inversion, and it's going to get spun every which way. Now, there are those that say, hey, this happened on CNBC today. It was laughable. It's getting a lot of coverage on the mainstream, this yield curve inversion. But they had one guest who tried to spin it and say, hey, you know what? The yield curve really hasn't inverted because the 10-year is still higher than the 2. Well, this is what they do. And this sell-off in the bond market is the fact that the 10-year yield is plunging rapidly. Let's just kind of get a visual on this. You got the yield curve, which now has distortions in it. We're at a partial yield curve inversion. We got the 10-year yield dropping now below 3%, 2.89, I think was last time I looked at it. So it looks like the entire curve is clearly poised to roll over. The last 2 times we had this, Dave, as you are well aware, I'm sure a lot of your listeners are too. The one before this was 2008. One before that was the dot-com bubble. So, the takeaway is history appears to be repeating itself, but we've never been here before. There are no models for this. The Federal Reserve has no models for this. No one knows what's actually going to happen this time because these distortions are so great. They are so immense. across the spectrum of asset classes right now that I do not believe that anyone is smart enough to actually understand, number one, what the actual price of debt would be. Does anyone believe that the yields would be where they are? Absolutely not. And what would that mean is stocks would be nowhere near where they are. So just to summarize here, this is going to correct to fair value. Are we starting to see it now after today's 800-point drop in the Dow? Well, there are a couple of things here that I think are flying under the radar that people are either, one, not being told about because they're not going to let people understand this. Well, and I'll outline this in a moment here. Or they think people are too dumb to hear, or they don't know for themselves. I'm referring to the mainstream financial channels. But what they probably are not telling you, and I haven't been watching any of I refer to them as the Confederacy of Dunces, the mainstream financial channels. But what they're not telling people is the issue with the markets selling off today. Yeah, markets sell off. And if people watch my work, a lot of times I kind of downplay it. But today was a little bit different. This sell-off, not because of the magnitude of it, it was the way this was skewed. A huge amount of selling. Most stocks, about 90% of the stocks on the New York Stock Exchange were being sold off today. We're only at like 10% or so were being bought up. Okay, that's one aspect of it. But the other issue, which people really need to pay attention to, is there was a lack of buyers. It wasn't so much the selling. It was the lack of buyers. And it comes down to this. In order for buyers to be found today, stocks were being offered at lower and lower prices. We saw the same thing going back to 1929. People couldn't sell their stocks. There were no buyers. So the sellers had to keep saying, okay, I'm going to lower the price. I'm going to lower it again. I'm going to lower it again. I'm going to lower it again. This causes a precipitous drop in the stock market. So that is alarming. We also saw the same kind of thing play out in the dot-com bubble and in 2008 as well. So is history repeating itself right now? It very well may be. People should be ready for it because, look, this is going to blindside people. They're not going to know what hit them here because all they've been told is that, the global economy is fine. Our economy here in the United States is doing phenomenal. So people are not expecting this. And that's when these things tend to hit. When people don't expect it, it takes most people by surprise. And that's what scares me, Dave, is I don't like people to be misled. I don't like people to be blindsided because it's always the middle class who gets the short end of the stick. It never stops. It's a repetitive pattern throughout history. It's very sad. But to summarize again, people need to be very cautious here. I don't want people to panic. It's the last thing you want to do in any kind of a crisis or possibly developing crisis situation. You never want to panic. You want to sit back, evaluate what's going on, and come up with the most logical conclusion. Otherwise, you're going to do things and make errors that will end up hurting you. And I don't want anyone to get hurt.
Do you think because the Fed is raising the rates right now, do you think they're the ones that are causing these distortions in the market? I mean, we see housing already that, you're raising the rates each time and it pushes people out of the market because they can't afford the homes because the housing prices are so high. Do you think with the Fed raising the rates, do you think this is affecting all of this?
Well, there's no doubt about it that rate suppression, and this is a global phenomenon here. This is, we're not an island. It's every single world central bank doing the same thing since 2008. You and I have outlined this multiple times here, and we've put it, I think both of us have put it into the same context that, this issue of artificially suppressing rates has reinflated a stock market bubble, reinflated a housing bubble, and caused malinvestments across the spectrum. So it would make sense that a reversal of this, which no world central bank, not one, ever had a plan to unwind this. This is QE on steroids. It never, ever stopped. When you hear that, when people hear, when the quantitative easing has stopped, you're listening to someone who has no idea what they're talking about. In order for the Federal Reserve or any world central bank to keep rates suppressed, they can't just say it. They have to get into the market, meaning they have to take cash, either print it out of thin air, more than likely add it to a digital screen, and buy the debt. This is how they keep rates suppressed. So yes, the Federal Reserve raised the federal funds rate in September, 1/4%. And again, it's been a nice drug for this market for a very, very long time. At one point, and I've put it in these terms, I'm sure you have too, there's going to be an overdose. And I think we got a little bit of an overdose just last week, and this is what disturbs me very badly. We kept hearing about, it really baffles my mind here. So, as you are well aware, and I've been saying this for the longest time, I want a real market. The market needs to normalize. We need to get the Federal Reserve out of the way. We need our politicians to get behind the people here and correct these distortions. So what ended up happening here for months is we've been hearing from the current administration that, we need to keep easy money going. We need to keep interest rates suppressed. And I was saying, no, absolutely not. We need this to normalize. We actually need to unwind this. Is there going to be pain? Yes. But by allowing these markets to remain artificial, the pain becomes worse. So what we got here last week was more of the same. We got a Federal Reserve who kind of, I would have to say, bowed down here to the president and said, okay, you know what? Rates are near neutral now. What does that signal? More easy money is going to keep pouring into this market. There's going to be no resemblance of a free market anymore. And what did that do? It caused this rift or this ripple in the yield curve, this inversion on the shorter end of the curve here. I say the median part of the curve, kind of. So this is a problem. And they got, like I said, there was never been a plan to unwind this, ever, never. All they knew was they were going to get in here and prop all this up. Now, it just is so simple. What do we know about every single world central freaking bank? They are the public enemy number one. That's the truth. I despise this organization, as I think most people realize that. And they're running the show along with their respective leader, who has to do what they got to do. I would imagine a lot of people are going to say, hey, they're doing this to keep it propped up. But who suffers? It's the middle class that's going to suffer here again, because it never changes. So I think the biggest policy mistake ever made in history was quantitative easing 2. This should have stopped after the Federal Reserve successfully unfroze the credit markets in 2008. That was the whole thing. When the credit markets froze, as you are well aware, something had to be done, in my opinion. We had to have transactions. In other words, if the credit markets were not unfrozen, there would have been no access to cash at all. Transactions would have stopped. The businesses couldn't fund themselves. That was it. That was the party over moment when we hit Dow 6,000, when the Fed jumped in. If the Fed really wanted to fix the issue, that's where they should have stopped, but they didn't. They went on to QE2 and then Operation Twist and every other thing you can imagine. And I'll tell you something else, Dave, that I don't think people know. And I have no proof of this, but from my study into what has been going on since 2008, world central banks are buying each other's debt to keep it off balance sheet. This is what they're doing, to keep it suspended. And what do we know about the Federal Reserve and every world central bank? They are serial bubble blowers. They blow up these bubbles and they deflate. All this does is transfer wealth from the middle class to the upper end of society here, the one percenters. And then everyone gets stuck here holding their head going, my God, what happened? And that's what's going to happen now. It's a shame that things are the way that they are. And this could have been fixed in many other different ways, but you almost can't blame. I mean, yes, you can. Okay, let me just rephrase that. No world leader wants this coming down on their watch, because their party will suffer an enormous amount of damage. That's just the way it's going to unfold, unfortunately. And I don't blame the president for doing what he's doing. I don't at all. I understand he has to play the game. The game is keep everything propped up, try to get us through this whole thing and maybe kick the can down the road. But there's going to be a point, no matter what they do, where it will not help. This drug known as, money printing, quantitative easing, easy money around the world is going to become toxic. It's just so simple to understand what this has caused here by all of this. I mean, we all understand. It's just no secret that at one point all of this, there's no other way to put it, but this is like a main line of the hardest drug known to man being pushed into this market to cause a fake environment. The markets are not real. The economy is not real. It's all being suspended on the back of central banks that have been propping everything up along with their respective world leader. So there is going to be this moment where this does correct to a fair value. It really just comes down to that. And it's going to be devastating beyond belief. Again, what does it come down to? We're all borrowing from the future in greater and greater amounts to sustain where we are. This is why debts and deficits right here in the United States are exploding off the Richter scale with no end in sight. It can't stop. This is the mechanism of the beast. It demands that we continue to do this. And this is becoming toxic. And it comes down to a resource problem. Like I've been explaining forever, how we continue to borrow from the future to sustain where we are. This has the potential to unfold almost in a biblical fashion because resources are being pulled from the future through this mechanism of the debt-based economic model. When this thing does finally hit the wall and we're unable to do this anymore, we're going to run into a problem here with being able to acquire resources. And there's going to be many people who are going to die. That's the bottom line here. And I can't imagine a scenario where we will not have pandemonium around the world. What's going to happen this time if we get a freezing of the credit markets? Well, what are they going to do? Print more cash out of thin air? Add it to a digital screen? That's the issue at its core. A new system will have to be instituted, but could you imagine the turmoil that is going to in between when a new system is instituted to when the old one is now dying? Because that's what's happening here. This died in 2008, and they've just been trying to keep the body warm by pumping it full of this drug. And it's a disgusting thing because people are going to suffer here. And there's no way around it.
Now, you said that, we're going to be transitioning into something different. Is this going to be like a gold-based system? Do you think the Federal Reserve will still exist? What do you think is going to happen?
I think, unfortunately, I can't see a way. We have to let's put a bigger picture on this. Let's say by a miracle that the Federal Reserve disappears, what happens to all the other world central banks that are doing the same thing? They're going to disappear too? No, it's not going to happen, unfortunately. This is a fleecing mechanism that has been put in place since the beginning. The Fed will never allow, in my opinion, it would take a revolution on a grand scale, more than a fraction of percent of the people that actually understand how this system works. It would take a revolution to bring about the demise of world central banks. And they will not allow a commodity-backed system. Why? Because their product is debt. It's the only thing they offer. They can talk about whatever they want. World central banks, all of them, Federal Reserve included, quite obviously. But their product is debt. They just keep issuing more and more and more and more and more in greater and greater amounts. That's it. And we all buy into it by participating into the system, and we're stuck in it. We can't stop. We all transact in dollars, euros, some other type of a fiat currency. What are we going to do? Start bartering? Again, there's not enough people to bring this down. And I wish there were, but there's not. It's a fraction of the population that understands this. Your listeners, I'm sure, have a clear understanding of how this works. But there's not enough of us to do it. They'll squash us like bugs, unfortunately. And maybe that's the grand plan. I mean, there are many that believe that the grand plan is to drastically reduce the world population so they can control those here that remain. And it does look almost like that kind of a scenario has the potential to unfold. I hate to have to say it that way, but look, we have already had a Great Depression. If this thing unfolds in the way that it looks like it may, because the distortions are so big and so out of control with this Frankenstein market, these bubbles have been inflated on purpose. And I do believe, I think we've spoken about this too. I think we're going back to a two-tier society. Middle class has been under systematic attack for a very, very long time. And it continues today. Unfortunately, we keep getting the crumbs thrown at us while the market keeps rising. Who owns most of the market? Well, it's the 1%. It's the 2%. It's the CEOs. It's the government leaders on the take, all of them. How does senators become multi-millionaires 10, 20, 30 times fold? Because they're on the take. Do you know, most people don't know this, that a senator can actually trade on inside information and not get in trouble for it? It's a fact. Look it up.
Didn't they pass a law where they wouldn't be in trouble for insider trading?
I don't know if it's a law. It may very well be. But can you imagine that? If you or I did that, well, they'd be at our door and putting us in handcuffs. But these criminals are allowed to do it. They're allowed to trade on inside information. I don't know if this is true, and I don't want to start any rumors here, but I heard that Nancy Pelosi did this recently, to the tune of a lot of money. Got some inside information and capitalized on it. I think it's no secret. I think most people realize that I don't like the woman, but it has nothing to do with her. I'm just bringing out a point here that if you're a senator, you can trade on inside information and it's okay. I don't find that okay. We need a level playing field across the board, and we don't have a level playing field across the board. I wish we did. But these are interesting times here, Dave. It's really the truth. And I want people to start to think about things. For example, this market today, the way this sold off was troubling to me. The fact that they had to discount the price of stock for people to buy it. And that's why we ended up with a 800-point drop. Is this the first salvo? Who knows? It may very well be. But if we start seeing that, if we start seeing this market skewed so far over to one side where there's all of these sellers and not many buyers, that's a problem. The bond market is a problem. This little rift that we have that they're trying to downplay on the mainstream is a problem. It may reverse. I don't know. We'll have to see. I think that a lot of effort is going to be made to prevent it unless they're ready to pull the plug. Look, this won't end until they want it to. That's the truth. It's going to end on their terms, unfortunately. And it's going to be so big and so fast, like their heads are going to spin and they're not going to be ready for it. So what I want people to understand is they always have to be ready for it because we are existing in an environment of extreme fakery across the board. And I'm not just talking about stocks. I'm talking about everything. Nothing is what it seems, in my opinion, right now. And what does that mean? That means that this could unfold in a way that no one can imagine actually how bad it will be on the middle class as we move forward. It's a sad thing. I hate to sit here and sound like this. I really do. And I've used the market as a weapon against these criminals for quite a long time. I've outlined for people how to do it to the best of my ability. And I think I've made a difference. But we may be close to something bigger than we can possibly imagine.
I just wanted to bring up something that Trump said, because he said that the central bank is the biggest threat. And he also said that the central bank is a bigger threat than China. Now, we haven't heard many presidents out there contradicting the Fed or saying that they're a threat. You think that he's pushing this to point the finger at the Fed and get people maybe woken up to say, hey, why does he keep mentioning the Fed? Why is he saying they're a threat? What's your take on that?
My take is pretty simple. When he was, this was going on for months. When the Fed was saying, hey, we're going to normalize rates. It was even on the mainstream financial channels, they were calling it an aggressive Fed. We need a normal environment. We need rates to go up. President Trump wanted to keep the easy money going, and he got his wish. This happened last Wednesday, when the Fed finally capitulated to the president's whim. The threat from the Fed was that they were going to actually make a normal market. We need a normal market. I've been yelling from rooftops about this. There's something very, very wrong here. The president owns this now. Owns it. He's now part of it. He wants the Fed to keep the easy money going. He wants the money printing to continue. He wants the rates to be suppressed. Why? To keep Wall Street getting richer. That's all this is. He can't deny this now. If this comes down, it's on him. We needed the market to normalize. The Fed is way behind the curve, and our president knows it. Candidate Trump came out blasting the Federal Reserve. One of the reasons why I voted for this guy. He said the Federal Reserve is well behind the curve. They should have been raising rates for a long time. And yeah, he was 100% correct. But now all of a sudden, the Fed's a threat because they want to normalize rates. Does that make any sense to anybody listening here? It shouldn't, because it doesn't make any sense. The market is twisted and distorted, and the only way to fix it has to start in the bond market. We need to raise rates. People need to start earning an actual rate of return on their savings accounts. People are getting robbed blind, and they don't even see it. They're too blind to see it themselves because they're being misled on a grand scale. It's off the Richter scale how bad this is. And every politician right now is playing right into it. It's disgusting. Disgusting. Should have been fixed a long time ago, just like the president said. But he chose to take the other path, and that bothers me.
So how long do you think we have? I mean, do you think the market's going to come down another 800 points or another 1,000 points? I mean, once they get the interest rates normalized, I mean, I think they're going to raise them.
They're going to normalize themselves, Dave. Look, the market at one point, this is what's going to happen. And this is not just Greg Mannarino saying this, because I've been saying it for years. And now you got big fund managers, multi-billionaire hedge fund managers coming out saying the same thing. The potential here is very simple. The bond market is in a bubble. It's just the biggest monster that has ever been created in the history of the world. If we would have been gradually raising rates, if the Fed wasn't so far behind the curve, these bubbles would not have been able to manifest themselves like this. So what's going to end up happening at one point, when people realize, why on earth am I holding a unit of debt that is yielding nothing, that I got to hold on for 10 years or 30 years or so? They're going to dump it. What's going to happen when we get a simultaneous run for the door? Well, if all that debt starts to get dumped, yields are going to spike. Now they're going down. It's like think of it as this way. It's like a bow and arrow. We're pulling back on that string down to build up more momentum, more potential power. So at one time, this will reverse. And when that does, you're going to get a massive hard sell-off here in the bond market, and rates are going to spike. They're going to skyrocket because the debt is worthless. The currency is worthless. As this happens here, and the cash is bleeding out of the bond market here, and it's going to put a massive amount of pressure on the stock market. We ain't seen nothing yet, and I'm leading up to what you were talking about. Where's it going to go? Okay. As this cash is pouring out of the debt market here and yields start to spike, this is going to have the reverse effect that QE has had, artificially suppressing rates. It's going to squash the value of stocks, and the stock market will be shredded, probably 2/3 of what it is now. And I'm probably being nice saying that. But all this cash is not going to go to money heaven. I want people to understand that. In my view, and I've never wavered from this, it's going to go into commodities. It's going to go into hard assets, which have been artificially suppressed. Bank after bank after bank after bank gets caught rigging the metals markets. Why are they doing this? Well, so they can have it cheap enough so they can continue to acquire it. It's a game, Dave. This is a game, and nothing is what it seems. And I think you and me and a lot of guys out here have done a very good job, or at least tried, to let people understand what's really going on. Ignore the distractions. Look at what's going on right in front of you and you will see clearly enough. Put partisan politics aside. This is not about politics. The two-party system is designed to keep people divided, to keep one group of people hating another and that group of people hating the other one even more. This has been a strategy that they've used on people since time immemorial, and it's time we start saying enough is enough and come together, because we are all responsible for each other. That's all we're going to have in the end when this thing comes, when it realizes a fair value. We are definitely staring down a worst case scenario, something I've been hoping we would avoid, something I would hope someone would do something about. But all these distortions that keep getting worse and worse. It's a shame, but that's what we're looking at. People need to be ready for that kind of a scenario to unfold.
Wow. Greg, thank you very much for being on the X22 Report Spotlight. Once again, how can people see all your work?
Go to my site, traderschoice.net. Thanks for having me on, Dave. This is just so important for people to hear, so important for them to understand, because I don't think they do. I don't think they get it and how bad this can get. The potential here for a full-on global meltdown, worse than the Great Depression, it just gets more real every single day.
Greg, once again, thank you very much for being on the Spotlight. I really appreciate it.
Thanks for having me. and the cash is bleeding out of the bond market here. And it's going to put a massive amount of pressure on the stock market. We ain't seen nothing yet. And I'm leading up to what you were talking about. Where's it going to go?
Okay.
As this cash is pouring out of the debt market here and yields start to spike, this is going to have the reverse effect that QE has had, artificially suppressing rates. It's going to squash the value of stocks, and the stock market will be shredded, probably 2/3 of what it is now. And I'm probably being nice saying that. But all this cash is not going to go to money heaven. I want people to understand that. In my view, and I've never wavered from this, it's going to go into commodities. It's going to go into hard assets, which have been artificially suppressed. Bank after bank after bank after bank gets caught rigging the metals markets. Why are they doing this? Well, so they can have it cheap enough so they can continue to acquire it. It's a game, Dave. This is a game, and nothing is what it seems. And I think you and me and a lot of guys out here have done a very good job, or at least tried, to let people understand what's really going on. Ignore the distractions. Look at what's going on right in front of you, and you will see clearly enough. Put partisan politics aside. This is not about politics. The two-party system is designed to keep people divided, to keep one group of people hating another, and that group of people hating the other one even more. This has been a strategy that they've used on people since time immemorial, and it's time we start saying enough is enough and come together, because we are all responsible for each other. That's all we're going to have in the end when this thing comes, when it realizes a fair value. We are definitely staring down a worst case scenario, something I've been hoping we would avoid, something I would hope someone would do something about. But all these distortions that keep getting worse and worse. It's a shame, but that's what we're looking at. People need to be ready for that kind of a scenario to unfold.
Wow. Greg, thank you very much for being on the X22 Report Spotlight. Once again, how can people see all your work?
Go to my site, traderschoice.net. Thanks for having me on, Dave. This is just so important for people to hear, so important for them to understand, because I don't think they do. I don't think they get it, and how bad this can get. The potential here for a full-on global meltdown, worse than the Great Depression, it just gets more real every single day.
Greg, once again, thank you very much for being on the Spotlight. I really appreciate it.
Thanks for having me.